right, so picture this, a future where we can really get to the root of diseases, like actually repairing messed up genes, replacing damaged cells, making these super advanced treatments available to a lot more people. That's what we're talking about today. Engineered cell therapies, pretty cutting edge stuff. And for this deep dive, we're focusing on a company that's really making waves in this whole movement. Sana Biotechnology, ticker symbol SIANA.
Yeah, exactly. And we're going to look at Sana the way a value investor might, kind of like how Warren Buffett would size up a business. So we're going to really dig into what they actually do, who's calling the shots, and what their financials tell us about their, true worth.
Makes sense. And for our listeners, you can find all the stuff we're looking at, articles, financial reports, all that down in the description. So, feel free to check it out. But today, we really want to give you a clear picture of Sana, their potential, the hurdles they face, all that, without getting too bogged down in the super technical stuff. So, hopefully by the end, you'll have some real aha moments about this company. So let's kick things off with the basics. What exactly does Sana Biotechnology do?
So their bread and butter is developing these things called engineered cell therapies. They're working with two main approaches, right? One's called ex vivo, where they modify cells outside the body and then put them back in. The other is in vivo, where they do the modifications right inside the patient. Now, right now, they're mainly making money from research collaborations and grants. In 2023, that was about $26.4 million, a bit of a dip from the year before. But got to remember, they're still pre-commercialization, meaning they don't have any approved therapies actually being sold yet.
Got it. So what are some of their flagship projects, the ones they're really banking on?
Well, there are a few big ones. First, there's SC291, an allogeneic CRT cell therapy. It's in phase 1 trials right now for B-cell mediated autoimmune diseases. And when we say allogeneic, think of it like an organ transplant. The cells are coming from a donor, not the patient themselves. This could solve some big logistical headaches compared to therapies that got to be custom made for every single person.
Right. Makes sense.
Then there's SC262, another allogeneic CRRT therapy, also in phase 1, but this one targets CD22 plus cancers. And maybe the one getting the most buzz lately is SC451, also known as UP421. This one uses stem cell-derived pancreatic islet cells to treat type 1 diabetes. Still in preclinical, but early results from a phase 1 trial, it was investigator-sponsored, have been pretty promising.
Now, something I keep hearing about is their hypoimmune platform, or HIP. What's the big deal with this technology? Why is it so important for them?
Okay, so the HIP platform, it's tackling a huge problem in cell therapy, especially when you're using donor cells' immune rejection. The body sees these foreign cells and tries to attack them. What this tech does, it's like making those donor cells invisible to the immune system. If it works the way they hope, it could totally revolutionize allogeneic therapies. Imagine making them much more accessible, way safer, because you might not even need those heavy-duty immunosuppressant drugs, which can have some nasty side effects.
So basically, they're going for these off-the-shelf therapies that could work for a much wider range of patients. Where does Sana stand in the overall market, though? I mean, how big are they, really?
So they got started back in 2018, went public in early 2021. Right now, their market cap is somewhere between $614 and $652 million, give or take. They have I think it's something like 330 to 380 employees. And their whole focus is on developing these scalable off-the-shelf cell therapies, all powered by that HIP platform. Their big selling point is creating these game-changing treatments for, really tough diseases, cancer, diabetes, autoimmune disorders, and that HIP tech is the key, letting them do allogeneic transplants without the whole immune suppression thing. So yeah, to loop back to what they do and how they make money, engineering cells to fight disease, and right now their income's mostly from those research collaborations and grants.
Gotcha. So let's zoom out a bit, look at the bigger picture. Is this cell and gene therapy market just a fad, or does it have legs, long-term potential?
It's definitely not a fad. This market, cell and gene therapy, it's expected to grow like crazy in the next decade. I mean, projections are saying it could hit like $111 billion, maybe even $132 billion by 2030, 2033. And the annual growth rate, somewhere between, high teens to almost 30%, that's huge. There's a bunch of things driving this growth. Chronic diseases are on the rise, R&D is advancing fast, regulations are becoming more supportive, personalized medicine's big trend, and then you have these powerful tools like CRISPR and Cartwright. So yeah, the long-term outlook for this sector is very, very strong.
But it sounds like a really crowded space, right? Who are they up against? Who are the big competitors Sana needs to worry about?
Oh, absolutely. It's a fiercely competitive field in biotech, especially cell and gene therapy. You've got the big dogs like Novartis, and then a bunch of other innovative players: Denali Therapeutics, Beam Therapeutics, CRISPR Therapeutics, Bluebird Bio, Editas Medicine, Intellia Therapeutics, you name it. So where Sana's trying to stand out is with their whole integrated approach to cell engineering, but most importantly, their HIP platform. That's their ace in the hole.
Now, what about the FDA, all those regulations? That's always a big hurdle in biotech, right?
Totally. In the U.S., it's the FDA, specifically their Center for Biologics Evaluation and Research, CBER for short. They're the ones who oversee these therapies. It all falls under the Public Health Service Act and the Federal Food, Drug, and Cosmetic Act. The exact path to approval, though, it can be pretty different depending on the specific therapy. Thankfully, the FDA does have these fast-track programs for treatments targeting, serious unmet medical needs. But yeah, navigating all that regulatory stuff, it's make or break for a company like Sana.
So it sounds like getting into this market is not for the faint of heart. What are some of the biggest obstacles for companies trying to break in?
Well, first off, R&D, research and development, it's crazy expensive. And then manufacturing, it's super complicated. Plus, like we just talked about, dealing with the FDA, that's a whole other beast. Then there's the issue of scalability. Can they actually produce enough of the therapy to meet demand if it's successful? Then you got to worry about the product's purity and consistency. And on top of that, a lot of these therapies need specialized treatment centers, which aren't exactly everywhere. And of course, there's the question of cost and whether patients can even afford these treatments. So yeah, you need massive investment, you need a team of experts. It's a tough business.
So it's a challenging industry, but with lots of potential. Now let's shift gears and focus on Sana specifically. What gives them a competitive edge, something that other companies would struggle to copy?
All right, so their competitive advantages. Brand recognition, they're definitely becoming more known for their work in engineered cells, especially with that HIP platform. Their partnerships, they're strategically teaming up with others, which helps boost their reputation. Obviously, they're not as big as some of those giant pharma companies, but they're definitely making a name for themselves. And they're smart about cost, investing in their own manufacturing so they can scale up and hopefully be more cost efficient in the long run. Focusing on those allogeneic, off-the-shelf therapies is another smart move. They're trying to avoid the cost and scalability nightmares that come with the individualized therapies. Now, network effects, not really seeing that play a role here. Switching costs, maybe down the line, if patients are already on one of their therapies, it might be hard to switch, but that's not really a factor right now. Their real assets, though, are their unique capabilities. That HIP technology, preventing immune rejection, that's a game changer. They also have a ton of patents, over 170, protecting all their tech. And their leadership team, they've got the experience, they know cell and gene therapy, they know biotech. So what makes them hard to replicate? It's that HIP technology, the patents around it, and their team of experts.
Okay, that makes a lot of sense. So they've got the tech, they've got the brains, but what about the people actually running the show? What can you tell us about the management team? Are they the right people for the job?
Well, when you're looking at a company from a value investing angle, the management team, they're super important. And at Asana, their CEO, Steve Harr, he's got a pretty impressive track record. He was the CFO and head of corporate development at Juno Therapeutics before it got acquired. Also, he was on the board at Loxo Oncology until they got bought out too. So he's got a good understanding of this whole world, especially the acquisition and development side. The rest of the team, they're no slouches either. They've got experience in research, clinical development, clinical operations, the whole nine yards.
Have they had to deal with any, big challenges, make any tough calls, things that show how they handle pressure?
Yeah, back in November 2022, they had to make some tough choices. They decided to refocus their portfolio. They really doubled down on their second HIP-modified allogeneic CAR-T program. That one focuses on CD22 as a target for patients who they didn't respond to CD19 CRT therapy. They also pulled the plug on their heart failure program, SC187, and got a lot more strategic with their platform investments. They actually had to let go of about 15% of their workforce, to streamline things and make their cash last longer. So they're not afraid to make hard decisions when they need to, which, shows they can adapt.
And how about transparency? Do they keep investors and the public in the loop? Or are they pretty secretive about their operations?
They seem pretty transparent. They put out regular news releases, investor presentations, conference calls, all that. And all that stuff's easy to find on their website. They even have webcasts and replays, so investors can stay up to date on what's going on.
What about their ethical side? Are they playing by the rules? Do they have a strong ethical code?
Yeah, they do. They have a formal code of business conduct and ethics. It basically lays out the expectations for everyone involved, employees, consultants, board members, everyone. Honesty, ethical behavior, the whole deal. They also have an ethics hotline. You can call it 24/7, completely anonymous. You can even report stuff online. So yeah, they seem committed to doing things the right way. So are they honest, capable, shareholder oriented? Yeah, it seems like it. They've got the experience, they're transparent, they've got their ethical guidelines in place, and they're laser focused on developing these potentially revolutionary therapies. That suggests they're thinking about long-term value for their shareholders.
All right, now let's dive into the money. How are they using their financial resources? Where's the money going?
Well, like a lot of biotech companies at this stage, a big chunk of their spending is going to R&D. I mean, in the first 3 quarters of 2024 alone, they shelled out over $170 million on R&D. Plus, they're investing heavily in building their own manufacturing capabilities. That's crucial if they want to scale up and make those therapies more cost-effective.
Has they made any, strategic acquisitions or licensing deals, anything to bolster their tech or their pipeline?
Oh, yeah, definitely. Back in October 2020, they acquired Core that gave them a glial progenitor cell program. They also snagged a licensing deal with ISO Bio and Innovent. They got access to a BCMA CAR construct, which they're using for their in vivo and ex vivo hypoimmune therapies targeting multiple myeloma. So they're clearly looking to expand what they can do and, zero in on some key therapeutic areas.
Now, what about share buybacks, dividends, anything like that?
Nope, no share buybacks that we know of. That's pretty normal for a company at this stage. They're usually more focused on plowing their money back into R&D. And dividends, no, not at the moment. Again, typical for an early stage biotech company, growth is the name of the game right now.
And how's the return on investment? Are they using their money effectively? What's their ROIC looking like?
Their ROIC, or return on invested capital, it's negative right now, sitting at around negative 43.58%. But that's not surprising, considering they're not profitable yet and they're pouring so much into R&D. This is a key metric to watch as they move through clinical trials and, hopefully get closer to selling those therapies. So it's tough to say definitively if they're using their capital in the best way to boost shareholder value. It's early days, right? Their R&D spending and those acquisitions, they suggest they're thinking long term. But whether it pays off, that depends on their clinical trials, FDA approval, and ultimately whether they can sell those therapies.
Okay, so let's dig into the numbers. What do their financials tell us about their health right now? Are they in good shape?
So as of March 2025, their market cap's between $614 and $652 million. And since they're not making a profit yet, their price-earnings ratio is negative. Their revenue actually dropped in 2023 by over 12%, down to $26.4 million. And get this, for the 12 months leading up to September 30th, 2024, they reported zero revenue. That could be a red flag. Maybe they're having trouble with those collaborative agreements, or maybe they've shifted their focus. Now, their profit margins, they're also deep in the red. Gross margins managed at 82.7%, operating margins 276.5%, net margins negative 81.2%. Yeah, not pretty. But again, they're spending a ton on R&D, and they haven't actually sold anything yet.
So are they drowning in debt? What's their debt situation like?
Well, their debt-to-equity ratio, it's pretty low, according to recent reports, somewhere between 0 and 0.33%. Seems like they're mostly funding their operations through equity, not debt. But there was one report that showed a much higher ratio back in 2023, so that's something to keep an eye on. Now, free cash flow, that's also in the negative. Outflow was over $273 million in 2023, about $56 million in Q3 of 2024. Basically, they're spending more than they're bringing in. That means their cash reserves are super important. Now, their price-to-book ratio is around 1.9 to 2.28. That basically means the market thinks their assets are worth roughly twice their book value. That's pretty common for biotech companies that have, a lot of growth potential. So are they profitable? Strong balance sheet? No, not profitable yet. Those margins and that negative free cash flow tell the story. But their balance sheet shows they had $199 million in cash at the end of Q3 2024. They think that'll keep them going into 2026. Plus, that low debt-to-equity ratio is a good sign.
Okay, so we've looked at the snapshot, but what about their financial history? How stable has they been?
Well, they haven't been around that long. Founded in 2018, went public in 2021, so we don't have a ton of data. But from 2019 to 2023, they consistently reported net losses, which, is par for the course for an early stage biotech company spending like crazy on R&D and not selling anything yet. No dividends either. Makes sense. They're putting everything back into the business. That low debt-to-equity ratio tells us they're managing debt well, and those successful equity offerings, that helps them stay afloat without taking on more debt. Working capital looks healthy too. Liquidity ratios are strong, meaning they can pay their short-term bills. So are their earnings volatile? Excessive debt. Well, they've had consistent losses, which is actually pretty stable for this sector. And no, doesn't look like they have too much debt right now.
All right, we've covered the business, the management, the financials. Now let's see what the market thinks is Sana. What's the overall sentiment? Are people bullish or bearish on the stock?
It's a bit of a mixed bag. The stock's taken a pretty big hit in the past year, but it did jump up in January 2025 after those positive results from their type 1 diabetes study. But recent technical analysis, it's giving a sell rating. So some short-term bearishness there. One thing's for sure, this stock is super sensitive to any news about their clinical trials.
And what are the analysts saying? What are their price targets? What's their overall rating on Sana?
It's interesting, most of the analysts covering Sana, they seem pretty optimistic. Their average price target is between $11.25 and $12.2. That's a decent potential upside from where it's trading now. Some are even more bullish. Their targets are as high as $15 or $16. And their rating, it's usually moderate buy to strong buy. But gotta remember, this is based on a small group of analysts, maybe 4 to 8 of them.
And how have recent events, specific news and announcements, how has that affected the stock?
Well, like we said, those positive type 1 diabetes results back in January, that definitely gave the stock a boost. And the FDA's fast-track designation for their SC291 program for lupus, that was back in December 2024, that was good news too. It means the FDA might speed up the review process for that therapy. So yeah, clinical trial progress and regulatory milestones, those are the things that really move the needle for Sana.
Right. There's also been a lot of talk about short interest in Sana. What's the situation there? Are people betting against the company?
Yeah, the short interest is pretty high. Reports say there are 42 to 44 million shares sold short. That's a big chunk of their available shares, like 33 to 34%. So yeah, a lot of investors are betting the stock will go down. But here's the thing. If they come out with some really good news, it could trigger a short squeeze. Those short sellers would have to buy back the stock, and that could push the price up fast. And if you look at options, the put-call ratio is around 0.27. That hints at some bullishness among options traders. More people are betting on the price going up.
Now let's talk about who actually owns Sana. What's their ownership structure like? Who are the big players?
Well, institutional investors, they're the big dogs here. They own somewhere between 88 and 94% of the shares. The big names are FMR, LLC, Flagship Pioneering, Inc., BlackRock, Vanguard Group, Inc., the usual suspects. When you see a lot of institutional ownership, that's usually a good sign. It means these big, sophisticated investors have done their homework and they like what they see.
What about the insiders, the management team, the board members? Are they buying or selling?
Insider ownership is around 8.6 to 31%. Lately, there's been more selling than buying. Now, insider selling, it can spook some investors, but it's not always a bad thing. There could be all sorts of reasons why they're selling. Doesn't necessarily mean they've lost faith in the company.
And is ownership spread out pretty evenly, or is it concentrated in a few hands?
It's pretty concentrated. The top 25 shareholders, they own about 91% of the stock. Big holders include Arch Venture Partners, FMR, LLC, Flagship Pioneering, Inc. That concentration can sometimes keep the stock price more stable, but it also means those big holders, their moves can have a big impact.
Now, what about corporate governance? Do they have good practices in place? Are they being responsible stewards of the company?
Yeah, it seems so. They have a code of business conduct and ethics, plus corporate governance guidelines. Their board has a few key committees: audit, compensation and talent, nominating and corporate governance. So they're trying to be accountable, ethical, and protect their shareholders.
All right, last thing, let's do a quick SWOT analysis. Sum up their strengths, weaknesses, opportunities, and threats. What do you see?
Okay, strengths. Their cell engineering tech, especially that HIP platform, it's a big one. Experienced leadership, solid R&D pipeline, those strategic partnerships, the funding they've raised, their strong patent portfolio, all good stuff.
And weaknesses. Where do they need to improve?
Well, right now they don't have any approved products to sell, so no real revenue stream. Their R&D is costing a ton, which means they're burning through cash. And their success hinges on those clinical trials going well and getting the FDA's stamp of approval. Lots of uncertainty there. And of course, they're not profitable, and their free cash flow is negative.
Okay, now for the exciting part, opportunities. What are their biggest chances for growth and success?
Oh, they've got a ton of opportunities. The cell and gene therapy market, it's massive and growing fast. They could develop groundbreaking treatments for all sorts of diseases. More partnerships and acquisitions could be on the horizon. And then there are advancements in related fields like gene editing that could really boost their platform.
And lastly, threats.
Hmm.
What are the biggest things they need to watch out for?
Threats, yeah, there are always threats. The competition's fierce in cell and gene therapy. Getting through the FDA, that can be a long and complicated process. Scaling up manufacturing, that's going to be a challenge. Then there's the risk that someone else comes up with better tech. Their stuff becomes obsolete. Protecting their patents is always a battle, and they need to keep that funding coming in, which can be tough, especially if the economy tanks.
So, taking everything into account, what's your overall take on Sana Biotechnology? Where do they stand today?
Well, there's no doubt they're at the forefront of this whole engineered cell therapy thing. Their HIP platform is very promising, and their pipeline, it's targeting some major diseases in a market that's only going to get bigger. Their leadership team, they've got the chops. But it's important to remember they're still in the early stages, lots of investment going out, no products bringing in money yet. They're in a tough industry with lots of regulatory hurdles and clinical risks. The analysts seem optimistic, but that high short interest, that tells us some people are so sure about them. From a value investing perspective, like what Warren Buffett looks for, well, they're a bit of a gamble. They have the tech, they have the team, but they're not making money yet. And drug development is always risky. That positive data from their diabetes program, that's something to watch closely.
That was a really thorough look at Sana Biotechnology. So for our listeners, I want to leave you with this. Think about the potential of cell therapies. They could really change medicine. But companies like Sana, they're still in the early stages. It's a long road to get those therapies to patients. So how do you weigh the potential rewards against those risks and that long timeline? It's a question we're thinking about. And if you want to go even deeper, check out our YouTube channel, Stock Analytics AI. We do a lot of these deep dives on promising companies, and we've got a ton of great insights. Just a reminder, though, this deep dive is for informational purposes only. It's not financial advice. Investing always has risks, so do your own research before making any decisions. And just so you know, we did use AI to help us analyze all this information.
Thanks for joining us for this deep dive into Sana Biotechnology.
We hope this gave you a good understanding of this really innovative company. All the links to the stuff we talked about, plus a link to our YouTube channel, it's all in the show notes. Until next time.